Hey everyone, thanks for checking in today's video. Today is May 10th, Friday, 2013. Let's go over this market. Beautiful day in the SPY, just continues to grind higher. And I did a iron condor 164 call, 161 just yesterday because I knew this would stall out here at this juncture here. And sure enough, that's exactly what we got. Beautiful profits on this iron condor. And early in the week, I did a 157 bull put spread, nicely below the 50-day moving average after an uptrend. Beautiful, beautiful profits, guys. This market just continues to grind higher. Let's look at a more macro chart, the weekly chart. We just continue to trade in this range, this channel since the 2009 low. If you connect the pivot lows here and the pivot highs here, we're still in this range. And guess what, guys? We are heading towards that upper range here. So that would be a very interesting spot to see how the market reacts. I don't think it have enough power to actually bust through it. So sure enough, I think what I'm anticipating is when it gets to this area, around 167, it's going to stall out and perhaps a pullback, okay, guys, because that's the only resistance you have, because we had our all-time highs. So this really uncharted territory. All you have is this upper channel to go off, really, and also measured move targets, where I'll get into as well. So also you have a smaller channel within a bigger channel. See this bigger channel, and you also have this is more, you probably trade this more off the daily chart, more of a swing trade basis, and this is more of a macro. So if you're more of a long-term investor, you probably want to take profits here, because this is a bigger chart pattern. That's what you want to go off a weekly chart. That's more of the bigger moves, okay, guys. But right now, chart is a chart. This also could be the third move up. So this could be a 1, 2, 3, 4, 5 wave. So 3 pivots to a high. This would be the third hit right here. So that's also another factor where this market could stall out right here at this upper trend line. And let me go to the intraday. Let me go to the daily chart once again. This is the smaller channel. So this is a channel within a channel. This is a smaller channel that's uptrending, obviously, with the moving averages. You're saying that. Right now we're stalling out here, consolidating. If we do have one push higher, the measured move off this, I guess it could be a cup and handle if you want to call it that. This is the cup and then the handle here, or bullish consolidation. You can probably see it more clearly on the hour chart that it's a cup and handle pattern. It's right here. Here's the cup. Here's your handle here. If you draw the measured move out, it does come out to roughly the breakout here. It does have more room to run. And sure enough, it does coincide with the upper range of this trend line here, and pretty much closer to this macro trend line here in the channel. Okay, so let's see how it all plays out. Right now, the market's holding up steady, still recapturing the moving average on the intraday charts. The hour chart, see, it's recapturing the 20 moving average here nicely, never confirmed below it. The 10-minute chart, it looked like it wanted to break down off this consolidation pattern here. See this trend it was riding here, small little, there's even more micro trend here. See, this is the daily, the other one I was talking about, and there's the more. So you see, there's always trends within trends. Okay, so this is even a smaller trend right here, intraday. This is probably, you want to use this off intraday trading, probably for day trading. See how it broke down right here, consolidated. It looked like it was going to make a head and shoulder pattern, but it looks like that failed. It just does not. This market just does not want to fall. It's just the volume's not there. The sellers aren't there. It looks like it made a left shoulder, head, right shoulder, and it failed. It never even finished the right shoulder. It was also a head and shoulder here as well, but that failed as well. See this left shoulder, head, and then right shoulder. It broke down, kind of retested it, and then it's pretty much failed because it closed back above it here. So now it's actually a failed pattern because we closed above this high. Now it just ended right at this resistance here. So it's beautiful how charts play out. See how this pivot high, and it's still right there at that close, right at that pivot high. Let's see if it continues to consolidate and if it wants to break to these next levels. I think it has more upside. Let's see if it has more legs in the coming days. If the next leg up does come to fruition, make it bake in the oven a few more days, and we'll head towards this 165-ish area, which coincides with this upper trend line. It is rising, so it could just ride it all the way up to this bigger macro trend line at around 167. Okay, guys, and that is roughly where the measured move is for this cup and handle pattern. Okay, so let's see how that plays out. Let's look at EA. EA is in a very intriguing chart, just a blast off, just a monstrous move. See this breakout here? This is the clear breakout. Kind of once you close and gap above, that's a gap play. Once you gap above a major level like this, I don't know if it's on news, but that's a fantastic run right there on EA. If you want to see it hold this gap, okay, that's what you want to see it to hold. Right, the first level you want to see is obviously the gap window, which is at 1982. So okay, so let me draw that in really quickly for a reference. You want to see this hold this gap here. That's your first more if it's on a swing trade basis, if you're holding this long, you want to see it hold this gap. Also this previous breakout. Okay, so roughly in this area, you want to see that hold. Right now, it is confirming above this level. So any fall into this $20 level, 1950, 1980-ish area, is going to be solid support. Now, I want to look at more of a macro look on EA. Okay, let's look at where we've been first. Okay, obviously we crashed down here from 40 bucks, or actually from way up in these ranges, 69 to 40 bucks. This was the breakdown. Okay, so that was your breakdown. You made a nice. Now you just look where you're going. You're just going nowhere for the longest time since 2009. You just consolidated here in this range from 11 bucks to 25 bucks. Now it looks like we want to retest that range, that upper end of that range. And your first stop right now, if it can build enough strength, I think it's going to stall out in the short term, because every time you make big green candles like that, you always tend to stall out. Look at even right here. This is a weekly chart. So every candle you see is a weekly close. Okay, so weekly trading. This is a weekly a bar. So that's a 1 week worth of trading. Okay, so you made a nice green bar here, and look what happened the next week. This is 1 week. It just closed pretty much the same spot, and then you got that nice next move. So every time you make a nice big wide range bar, it's very common where you just kind of stall out. Okay, it just takes a breather. It just needs to digest this big green up move. Okay, and that's what you got on this bar as well. So I'm anticipating for EA to kind of just pause here, and then if it does want to make a next move, it has to make a pattern here, nice sideways pattern for 2-3 weeks maybe, or even 1 week, 2 weeks. But at least I like to see 3 weeks here. Let it bake, and then you get a nice additional move to this $25 level. First level you want to see is the 2370. That's your first target, which is the pivot breakdown. There's not much resistance anymore. I mean, it busted through the 75, busted through the 618 retrace. It already broke through this upper trend, which is really, it takes a lot of strength for it to do that. So I do anticipate, that's another reason why I anticipate for it to stall out. It needs to kind of consolidate here, because it takes a lot of power to break the upper band of a rising channel. Okay, but nonetheless, there's no resistance pretty much to the upside until 2370 and ultimately 25, and that's your spot where you probably want to take off more of your long trade at 25, because this has been resistance for the longest time. Okay, and if this can break out, it could that's a clear path to pretty much 40 bucks. Okay, I don't foresee that in the near future, but definitely I think $25 isn't definitely in the cards for EA in the coming weeks. Okay, guys, very little resistance coming in. You already busted through the 618 75 retracement. You're at the 75% retracement now, so I'm anticipating a stall out here on EA. Let's look at the monthly chart really quickly before I go on to the next chart. Pretty much just more, it's in this range here, and it's breaking out, it's retesting these highs. Okay, so let's see if EA can muster up a little bit more extra move here in the coming weeks, and build some strength, and consolidate, make a nice pattern, and head for that $25 level. But first stop is the 2370. Let's go to Apple. Apple, it's a very let me go back to EA really quick before I go to Apple. It's a very intriguing chart where, see, when it sold off, it actually made a nice golden cross. Okay, this is on the weekly chart. Look at this. After this big sell-off, see how it took a long time to consolidate here at these levels to finally start to recover. See, these moving averages were always going down sloping. It was neutral here, and it kind of uptrended here for a bit, and now we made a nice downtrend, and now we got the golden cross again. The golden cross is when the shorter term moving average crosses over the longer term. So the blue line crossing over the green line here in this case, that's the golden cross, and that's your first sign that this stock is recovering. Look, and also the daily chart as well. The daily chart, you have the same as well. You got the golden cross here, and that was your sign that this stock was going to be turning around. See this, after a major downtrend, it's starting to consolidate. The moving averages are starting to turn around. See, you got your golden cross right here to the upside. You got another golden cross here, and now you're pretty much getting another one here. See how it's just kind of slowly trending up. It's just riding this channel. It just continues to ride this channel since this low that we made around 11 bucks, 10 bucks. 977. So it just continues the uptrend. As long as it holds this trend line, that's the trend right now, and these moving averages are confirming that. So that's your first sign that this stock is turning around after seeing a golden cross multiple time frames. Okay, and that's what brings me back up to Apple. Okay, that's another reason why I kind of brought those golden cross up. Apple is hitting right into resistance here. Now you shouldn't be surprised here. This is a big, really standout pivot. Okay, so that's why you're seeing this nice pullback. Now what you want to see is a nice pattern to go long on Apple. I'm anticipating a nice inverse head and shoulders. Okay, this is a nice big left shoulder, big head. Now you want to see a big right shoulder form here in the next coming weeks. You want to see even spacing. So if this was about a month and a half, you want to see this right shoulder to be a month and a half as well. Okay, so let me draw this in right here. This is what you want to see. Nice right shoulder into moving averages like right here. You want to see a Fibonacci retracement, about a 382 retrace. That's a very strong. If you can hold a 382 retrace, that shows the stock's very strong. And the moving averages that are curling up as well. You're starting to get perhaps a golden cross here as well. See, that's why I'm trying to call this out. If this becomes a golden cross, this could be an early sign that the stock could be consolidating and could be turning around. See this big downtrend, 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 downtrend. And what was the sign on EA? That golden cross, right? Now you're getting that on EA on Apple right now. Potentially, okay, so in the next coming days, if this can curl up to 20, remember I told you the shorter moving average crossing over the longer term moving average, the 50 in this case, if it comes right down to that dual moving averages, that's your spot, which is also a 382 retrace. If you kind of extrapolate this moving average to kind of curl up over here with the 20, it will probably cross over roughly around in the next coming days at roughly 535, which is actually the 382 retrace. So see how you're putting together multiple patterns with Fibonacci, with moving averages, as a if you make a case it's a bullish consolidation pattern as well. If it kind of slowly, grind it down here with a time count as well, that's a good risk reward trade. And that your stop out's quick. If it closes below these moving averages, it's headed back towards the 380 area. Okay, but that's what I'm looking at on Apple. See if you see how it's confirming trading well above these moving averages now. See here, it just kind of faked you out here, head fake and crashed down. Now it's doing very constructive movement above the 50. Now I just want a nice pullback into these moving averages. Maybe you can form this right shoulder, and then you get a nice upside target. If I just do a quick estimate of this, if this was a inverse head and shoulders, you can do a quick. It's tough to do a measured move since it hasn't broken out yet, and it is a declining neckline. Let's say it breaks out with symmetry, it would come out to around 544. Okay, just that's a rough estimate because there's no way there's no way of telling when it will break out or if it will break out at all because the pattern is still preliminary. It hasn't even played out yet. But if you're bullish, this is the scenario you want to look at. You want to look for a bullish case that's constructive, nice consolidation to two moving averages, 382 retrace. You can go long either there or go long after it confirms above the neckline. Okay, I called out the pretty much this is going to be the low on Apple after it made a hammer candle on the monthly chart. So you know how to read candlestick patterns, multiple other reasons for a stock to turn around, like the 50 moving average here on the monthly chart. You got to be able to read all those signs. See this doji here, this hammer candle or hanging man candle, if you want to call it, topping tail candle. That's the reason why we sold off. Now we're getting the reverse of it right now, a bottoming tail candle on volume, and that's why I called that's going to be the bottom. So you want to see some nice sideways consolidation here. I think this Apple has room for the upside to move up. Okay, the monthly chart still has an uptrend, so nothing wrong with the longer term macro pattern right now. Let's look at Amazon. Amazon still, it actually recaptured that 200 moving average here, so never confirmed below. Now we're trading back into that range. So I suspect it's going to just stay range bound to this range and maybe perhaps test the upper range of this channel that's kind of down sloping. Okay, nothing to do on Amazon right now. Let's look at Priceline. Priceline, it's very intriguing because, PCLN. Priceline is a very intriguing chart because I called out this trend line and it just continues to hold it. I called this trend line many weeks ago. And I even called it out here as it back tested it. That's very intriguing that it's testing that trend line. And sure enough, you got a nice move to the upside. After hours, it reported earnings yesterday after the bell, I believe. After hours, it caught support at this trend line at around 699. And look at that. See how this technicals work beautifully. And that's just one factor, but this trend line just held spectacularly, and now it's getting a beautiful bounce. Let's look at GLD, the gold chart. It's a very intriguing chart. We gapped down and we found support right here. See, this is previous resistance here because that was the upper range of that red bar, and we got above it, support. Now it made a nice consolidation here. Failed. Now we're testing the lower band of this range. Okay, now it looks like it wants to chop around here, make a nice pattern. Wait for this. If you want to go long, you gotta wait for this blue moving average to kind of flatten out. See if we can get a nice long consolidation pattern here to go long. Okay, guys, because I called on a weekly chart. This is going to be short-term the low. Okay, I called this a short-term low. Sure enough, that's what you're getting because of this hammer candle. That's why it's so important to be able to read Japanese candlesticks. Are so important. But you always got to put it up. Put it together with Fibonacci, moving averages, patterns, and time counts. All these things, you know, you have to put these together, and that's how you get really great trades. Okay, I called this low. This would be the short-term low, and sure enough, that is the low because it is hammer candle. And right now, we're just kind of consolidating on this 200 moving average on the weekly chart. And like I said, it has to consolidate here. Let's see if it can consolidate here and make another move higher. It looks like it just wants to stay in this range now. The smaller range broke, and now it looks like this is a new, bigger range between 142 to 137. Okay, that is a GLD. Let's look at some of these other major indexes really quick before I take off. The IWM just continues to grind higher. If this is a measured move here, if you want to measure it out, if there's big up move, consolidated here pretty nicely, and the measured move does take you around 99.50 to $100. So let's see if that plays out. There's no near-term resistance in my eye right now, so it looks like it's free to run. We are in super bullish mode right now, so you do not want to be fighting the trend. Do not fight the Fed, okay? The SPY, that's the only resistance I've drawn out right now. I do most of my work on the SPY. So if you're looking for a resistance level, that's really all you can really look at is this upper trend line. See if you scroll back. You guys can draw this on your own charts. Find this on a daily chart since the December low. It's just riding this channel, and that's on the daily chart. And the bigger, even more macro weekly chart, it's riding even bigger channel. So that's all you can really go off of right now. It's just off this bigger channel that is making on the weekly chart. It's not pulling up right now, so it's rare, and pretty much we're right at the upper range, okay, of this market off the channel that it's been trading in since 2009. Okay, and the measure move does take you off this cup and handle to around 165. Okay, so let's see how it all plays out, and let's see if it can bake here and make another leg move. I do anticipate that, even though it is kind of extended from the moving averages. I think right now the market is a little bit in euphoria mode right now, so I don't think it's really going to pull back. But we are, just note that we are at the upper range of this trend line here on this smaller channel and also the bigger channel. Okay, we're getting pretty close. Okay, guys, I'm going to take off here. I just want to do a update for you guys for the week because I haven't been doing any updates for you this week. So hope you guys traded it well. I'll talk to you guys next week. I'll talk to you guys later. Have a great weekend.